Today in crypto, Bitcoin is moving higher. Is a new all-time high possible this year? Maybe. Just maybe. Also, Ethereum could be weeks away from the launch of ETH 2.0, and if so, I believe it will be a massive market catalyst event that could really ensure that we end up finishing 2020 on a high note for the markets. And I have some news about the hot new Binance IEO that is coming out next week for you, so make sure to stick around to the end of the video to hear about that. My name is Lark, and this is where you subscribe for all of the hottest and all of the latest happening out here in the wild land of crypto. So let's start off by talking about Bitcoin. The old boy had a 4.3% surge today, pushing up to $11,700 before pulling back a little bit. We are quickly approaching two very key levels of resistance at $12,000 and $12,500. If we can break these levels of resistance, then Bitcoin has a good chance to make a strong move higher, as this will represent a new high for the year, after which we can target the key levels from 2019 and of course all the way back in 2018 as well, moving towards that new all-time high. In fact, we could be in for a strong rally here, because the last 3 times that Bitcoin crossed over the 50-day moving average, it was followed by an average rally of 42%, and we just crossed over the 50-day moving average again. That would mean that we could see Bitcoin rallying to $15,500 over the next 4 to 6 weeks, which would be amazing. Obviously, history doesn't repeat, but it does often rhyme. But before we do get too excited, we must remember that our fate is still largely tied to the equity markets. So the S&P 500, it has also had a strong start to the week. Unsurprising then to see Bitcoin moving lock in step behind it. We are now only 1.5% away from a new all-time high for the S&P 500. That's unreal, man. Totally crazy stuff happening in the markets. But this is also a critical juncture for the S&P 500. The S&P 500 needs to break through here to hit a new all-time high. Otherwise, we are looking at a bearish double top to be playing out for the S&P 500. Also, I want to point out our crazy correlation with the S&P 500 right now. So take a look at this chart here. We are tracking so closely with the stock markets. This is absolutely nuts. The good news is that the stock markets are totally disconnected from reality right now. They just keep on pumping upwards in spite of the economic reality, which is looking pretty gosh darn grim. The bad news is that unless the markets get more free money in the near future, then they might stall and of course bring Bitcoin back down to earth with them. Also, WTF here, can we just seriously? The S&P 500 has hit 4 new all-time highs since Bitcoin hit its all-time high in 2017. I think we are about due for a new rally and a new all-time high for Bitcoin. Those new all-time highs are coming. I still maintain my original analysis that I shared a few months ago, that Bitcoin stands a good chance of hitting a new all-time high this year. And no, I am not talking about $100,000, but maybe something like $21,000 could be in the cards for us at the end of 2020. In order for Bitcoin to hit a new high, it would need to add 7% a week for the next 11 weeks. That is certainly possible. Bitcoin has done these things before. It has been known to pull off these kind of mega rallies. And when the honey badger starts running, sometimes nothing can stop it. We are just one PayPal announcement away from a Bitcoin mega rally. And of course, we must keep in mind that November and December are usually really good for the stock markets in election years. So by association, and of course by correlation, we will see that be good for Bitcoin as well. So get ready. A rally to $15,500 by the end of November could be in the cards, and $20,000 sometime in December is not out of the question at all. So hodl on, my friends. A big thank you to BlockFi for sponsoring today's episode. So if you have been curious about earning a passive income with your cryptocurrencies, then you absolutely should check out BlockFi. You can earn 6% on Bitcoin, 5.25% on Ethereum, 5% on Litecoin, 4% on Paxos Gold, and 8.6% on dollar stablecoins like USDC. With their Flex Pay option, you can get paid out in any of their supported currencies. So for example, you can deposit USDC stablecoins and then get paid out in Bitcoin. BlockFi also allows you to get cash in a flash with their loan service. So instead of selling your precious Bitcoin, you can actually use BlockFi as a way to put up your Bitcoin for collateral for a tax-free cash loan, which is pretty gosh damn cool. And if you sign up for BlockFi using the link down below in the description, then you will receive $25 in free crypto after depositing $500 or more in your interest account. So a great way to get started if you have been curious about trying the service. Now you can try it and get a bonus as well. Okay, now on to the news. I need to share this whale tale with you. So 1,000 Bitcoin, which has remained untouched since 2010, is on the move again. Now, when this Bitcoin was mined, it would have only been worth around 10 cents a coin. So all 1,000 Bitcoin is worth around like $100. Now it's worth close to 12 million. You know, I don't even know how this person functions in day-to-day life with such like mutantly strong hands. Must be weird. Imagine holding all that time and not selling once. That's crazy. So why is the whale moving their Bitcoin now? Are they selling their Bitcoin? Well, no, it does not seem to be the case. The simple reason is that it appears that they are upgrading from the old address standard for Bitcoin to the new address standard for Bitcoin. So that's pretty cool. They've actually broken their holdings down as well into smaller lots of 10 Bitcoin per address from the 50 Bitcoin per address from block rewards from mining back in the day. Likely they're doing this for security to spread out their risk a little bit. The whale also made a $100,000 donation to the Free Software Foundation, which is a nonprofit promoting computer freedom around the world. Well played. Well played, whale. I like it. Now let's move on to some Ethereum news. Grayscale's Ethereum Trust has officially received reporting status from the SEC. So the Ethereum Trust will begin regularly disclosing how much money is flowing through its passive ETH investment vehicle. This is super cool. So accredited investors who hold the Ethereum Trust via Grayscale, they will now be able to sell after only a 6-month lockup instead of the usual 12-month lockup. Grayscale's director said, "We're seeing interest from investors who have become more and more comfortable with digital currencies through Bitcoin exposure and are now looking at how else they can diversify within the crypto asset class." Because of course, that's what they're doing. Bitcoin's the tip of the spear, and everything else follows afterwards. Anyone who thinks that institutions would be only ever interested in Bitcoin, you're crazy. You're crazy. Just because Square and MicroStrategy, who are run by Bitcoin maximalists, only bought Bitcoin, other institutions will buy Ethereum. Ethereum was already the second biggest Grayscale trust. This new announcement will mean that more money can flow into Ethereum via Grayscale, and I'm sure that it will. And this is actually just so bullish for Ethereum to see this level of approval for the Grayscale trust. We've also got some other exciting Ethereum news today as well. Ethereum 2.0 has been successfully launched on testnet. Now this comes just a few weeks after a previous attempt failed due to bugs in the code. So the patches have been made and this launch went off without any drama. Very, very cool. The core Ethereum team are saying that this was the confirmation that the developers needed to go ahead with the mainnet launch. Well, they may do a few more test launches just to be super, super sure before they do launch phase 0 of ETH 2.0. It is incredibly likely now that Ethereum 2.0 will be launching in 2020. Obviously, something can still pop up between now and when they do decide to finally launch it, but this is good news. And it moves us one step closer to the next age of Ethereum for Ethereum 2.0. It's just going to be such a powerhouse. It's crazy. There's a very good chance that ETH 2.0 will launch in November. I mean, don't hold your breath. Might be delayed till December, or something might come up, but November is looking more and more likely. So get ready, guys. This will be a major event for the markets when it happens. If Ethereum 2.0 launches in November, then I fully expect it will be a major catalyst on par with the Bitcoin halving in terms of importance for the market. I would expect an Ethereum rally to come off of the back of a successful Ethereum 2.0 launch, as well as a wider market rally. Remember, it's not just the hype around the event itself, but that millions of Ethereum will be exiting the market and taking a one-way trip to stake in ETH 2.0. Those Ethereum won't enter the market again for a couple of years, and that is big. And the final story for today, the next Binance Launchpad IEO has been announced. It's called Injective Protocol. Now, this is one that I am very bullish on personally. So what is Injective? Injective is a universal DeFi protocol for cross-chain derivatives trading, which covers a wide range of financial products, including perpetual swaps, futures, and spot trading. Now, Injective is built using the Cosmos SDK and will allow for cross-chain trading over Cosmos and Ethereum and other compatible layer 1 blockchains. Now, to keep fees low and to keep speeds high for trading, Injective is actually going to be operating at layer 2 for its trading solution. So all the trading is going to happen at a layer 2 environment. Their technology will also allow any derivative market to be traded, which is amazing. All that is required is for that derivative market to have a price feed. That's going to open up a lot of opportunities that you're not seeing currently available on other exchanges. In addition to the different trading features available, there will also be liquidity mining as well as cross-chain yield generation. Now, the token will grant governance rights to holders, but there will also be token burns, which will bring a lot of long-term value to token holders. The token will also be able to be used as collateral backing for the insurance pools. And so in that situation, you'll be staking, and stakers will be able to earn interest on their locked tokens by supporting those insurance pools. Injective is backed by Binance Labs, and it's launching as an IEO on Binance on the 20th. Now, it has already partnered, besides Binance, obviously, with some big players like Elrond and Kava, and will be getting liquidity from WooTrade, which is backed by Kronos, and that is, in case you don't know, the biggest liquidity provider in Asia. So that's a very big deal. That's a WooTrade, by the way. It's also one to watch out for. That's a story for a different day, but that's something you put on your radar as well. I will be investing in Injective personally. I think derivatives are massive. We see how big they are already. They're some of the biggest, highest volume markets in the crypto industry and in the traditional markets as well. Taking them to really cross-chain layer 2, it's crazy. It's going to bring in so much utility. And being backed by Binance, well, basically ensures that this thing is going to be successful anyway. Just my opinion, of course. Your question for today: do you think that the launch of Ethereum 2.0 is actually going to be a really big event for the markets? Is it going to be a big fat nothing burger? Is it already priced in? Or is it moon time, baby? Let me know down below in the comment section. Thanks so much for watching today's video. Long live the blockchain, and peace out till next time.